This tutorial is brought to you by Bityard. Bityard is an exchange that can do so many things. You can copy trade on there, you can open mystery boxes, you can mine coins on the daily to earn some money, you can also trade futures and loads of other things. You can also trade your favorite coins like XRP, UFO, Bitcoin Cash, and so many other coins. And if you're interested in diversifying your spot portfolio, move some money over to Bityard and start trading there as well. The link for all of that is in the description. Right, so I guess the first thing we need to discuss in this Fibonacci extension tool tutorial is actually what a Fibonacci extension is. Essentially, way back in the day, there was this guy with the last name Fibonacci, and he decided that he was going to try and algorithmatize or break down how plants decide or how nature decides where to put specific things. So in the case of plants, it was all about how does a plant decide where to put their leaves? Now, you never notice that a tree puts its leaves in the wrong place, do you? Each leaf has the right exposure to the sun so that it can get its photosynthesis process done. And so when you look at things like shells, like seashells, and you get those curly patterns, those swirly patterns, or in snails, that's actually all a manifestation of the Fibonacci sequence. So it's basically how nature decides the order of things. And so because all of those things have a biological nature, and we as humans are biological too, the interesting way that the Fibonacci sequence has relation to us as biological creatures is actually our decision-making process. Now you can actually use these lines on the Fibonacci chart, which we'll get into in a second. You can use these lines to measure human behavior or human decisions based on a buy and sell charting system using the Fibonacci retracement tool. The retracement tool is a reflection of the actual algorithm that is created, the Fibonacci sequence algorithm. And with all that boring stuff out of the way, although I found that really, really interesting, knowing that something is biologically backed, how many other indicators have biological backing? And I think, it makes it a lot more believable, a lot more trustworthy when you're talking about things that actually have relevance to you at your biological level. That's just really, really cool. Where you're going to find it on your normal trading view chart is you're going to go over to your indicators. If your indicators are in fact not visible on the left hand side, you can actually go over to this yellow little arrow show drawings toolbar button, and you can click that and all your extensions will come out the side here. Then what you can do is you'll select this fork one, which is it's default to the fork one. You click the arrow right next to it. You can see it says Gann and Fibonacci tools. So right down here, we have Fibonacci retracement. Now what I like to do is I like to put a star. When I click the star, it makes a quick bar at the top of the screen, and I can drag that around wherever I want it. So I can use that wherever's most convenient to me. The other tool that we're going to use when we use the Fibonacci tools is a circle. So you click the paintbrush, the arrow next to the paintbrush, you go down to ellipse, and then again the star, and the circle will be added to your toolbar there. And the final one I use is by clicking on this line at the top, the arrow next to the line, the trend line tools button, and then we're going to select horizontal line, and I'm going to click the star on that one as well. So now I've got all of the tools I need to use the Fibonacci extension tool, and now it's time to actually place it onto the chart. Now, so all you do is click Fib retracement, and it should turn a different color. You can actually determine the colors of all of these right here. We're not going to worry about that right now because we're just going to place the tool onto the chart. What we want to do is, you can see there's a crosshair here. So we've got a vertical line and a horizontal line based on where the cursor is. What we want to do is make sure that horizontal line is at the top of the previous all-time high. This is how I use the Fibonacci's. There are plenty of ways to use the fibs, but I know that if you watch this channel, or you've watched this channel for any amount of time, you probably enjoy the way I use them, and they've been successful for me, so I'm not going to change the way I do it. So what you're going to do is you're going to make one click, and you'll see that all these lines start to extend out of the chart. Now they can flip to the other side, and they can flip to this side. What we want to do is actually, now we've made one click where the horizontal line was at the top of the previous market. Then we want to come down with the fibs, and we want to make one more click where the horizontal line, or the bottom of the Fibonacci chart, is actually at the bottom of the bear market. So you can see right here that the local low, which on this chart, on the Bitcoin chart, was the 22nd of June 2021. So you can make this as wide as possible to give you some kind of scope for looking at the future. And then you click one more time. Now the Fibonacci extension tool has been put into your chart. Typically, when you get like the out of the box chart, it isn't on a logarithmic scale. Logarithmic basically, in my mind, kind of reduces the emotional feeling of seeing big price movements. And the average chart, the normal chart, will actually go up in incremental things. Like this is going up $5,000 at a time. How to change it to the logarithmic chart, which is what I do, is you click this button on the bottom right, this cog for the settings, and you can see logarithmic right here. All you do is click logarithmic. Now what you can see is that the prices on the right actually change. It's not even, right? So on this one, you go from 6,800 to 68,000 to 74,000. And then on this one, you go 74 to 82, and then 82 to 90, so that the chart ends up getting flattened out. Now, one thing about the free TradingView plan, which is why I'm doing it on here, because I know that most of you won't have a paid TradingView plan, is that you can't necessarily get the historical data that you need to be able to draw the Fibonacci extension tool like I do it. So here's how I would get around that. So what I'd do is I'd come over to a different charting system. This one is CoinTrader Pro. And this one is the one I use for all my historical data, especially if you don't have a TradingView account. And essentially what you can do here, we're on logarithmic scale. And what you can do is you can place the Fibonacci's on here. So we use this crosshair. That horizontal line goes at the peak of the previous market, which in this case is the 14th of December 2017. You click once, you drag it down so the horizontal line or the bottom of the Fibonacci's hits the bottom of the market, which is right down here. What we can actually do is mark some key prices on the Fibonacci so we have them to store for a little bit later on. So we can click this line. We can also change the color of these to make it nice and clear. This line represents the top of the Fibonacci's. This line represents the top of the previous bull run, and this line marks the bottom of the market. So when we take the Fibonacci's away, we have 3 points that we can actually place on our TradingView chart so that we can use the Fibonacci's accurately on that chart. So all I'll do is I'll make note of the price points, and I'll come back into my TradingView chart and I'm going to draw these lines back on so that I can place the Fibonacci's properly within BitYard. Now, a really cool way of doing this is actually you take that horizontal tool, which we've already saved in our toolbar, and you draw 1, draw 2, and draw 3. Doesn't matter where they go, and there's a reason for that. So we're going to right click that bottom line and click settings. On here, we're going to click up at coordinates, and right here you can type in the lowest of your numbers. So for me, that was 3,175. When I click OK, that line gets put right down in the exact same spot as I did on my CoinTrader Pro account. Obviously, none of this, you don't have to do any of this if you have a TradingView account, a paid TradingView account, because the TradingView chart in BitYard will be historical. It'll have all the historical data. But this is for those who don't have a paid TradingView account. Then we're going to do the same for this middle line, settings, coordinates. We're going to change the number to what we had on the other chart, which for me was $20,263. Click OK, and it's been placed there. And then we'll do the same with the top one, settings, change the number, which for me was 76,137. So we know now that this middle line was the top of the previous market, so we can start our Fibonacci's here. If it doesn't click over here, see I'm clicking the Fibonacci here and it's not clicking, it's because you can't click before the historical data that the chart shows. So we'll have to start here, right where everything begins. This is the peak of the previous market. We drag it down to the bottom of the market, and we can see that perfectly all of these lines line up and the top of the Fibonacci's is now being placed. So we can take these lines away, and we now have an accurate Fibonacci retracement tool placed on this chart. And I guess I want to talk about the features of these charts. You can change every single color that you see on here. We just right click one of the lines, click settings, visibility or style, and add or change any of these numbers or any of the colors. What I want to do first of all, because it's key in when you should be selling your coins, is what you want to do is you want to click or check one that is unchecked. And we want to change that number to 0.702. Now, if you love the 702 Fibonacci extension, then put that in the comments. I've actually got an emoji on this channel, a 702 emoji, so go and find that and place that in the comments. That'd be really funny to see. We use the 702 Fibonacci extension extensively on this channel. It is the key line that determines when we come out of the market. And there's more of that, more information on that in the description and any other video that I make. But what you might want to do is, if you've got dark mode on your computer, so you've got this dark background, you might want to change this to a color that you're going to see. So a white one would be really good. And obviously, if this is a white background, you're going to want to change it to something darker so you can see it like black. So now that we've changed that to white, we can clearly see the 0.702 Fibonacci extension line. And while that might not necessarily be something you're always looking at, it's good to always have that set up on your fibs. And if you want to see more about why, then just keep watching my videos. I'll touch on it a little bit later on in the video. So essentially, when I place my Fibonacci extension tool on, I'm using the peak of the previous market, which is this line right here, and dragging it down to the bottom of the market. Historically, when we place those Fibonacci extension tools at previous markets, it dictates where the price movement is going to go for that cycle. And if we use 2012 to 2014 as an example, we placed the Fibonacci's at the peak of the cycle and then at the bottom. And what it did was, if you sold at the top of the Fibonacci's, it would have been a fantastic time to sell. Now, throughout the course of 2013, the price remained pretty even at the top of these until it then broke out. You know, if you had sold at this level and then bought back in at this level, you would have been then riding the wave up to the next one. And we can do this again with the Fibonacci's. So we can place at the top of this cycle, drag it down to the bottom of that cycle, and look at that. Selling at the top of the fibs would have given you an incredible return. And this gets repeated over and over again over the course of time, especially for Bitcoin, but also a lot of these coins that have history. We can see them and track them using the Fibonacci's, and it can give us a really good indication of where the top of the next markets are going. That's why when we place the Fibonacci's right on here and we drag it down to the bottom, we can see that the Fibonacci's come all the way up to the top. And what do you notice about that? I'll draw the Fibonacci's on here one more time. What do you notice about the price movement for Bitcoin in this cycle? We're in the 2021-22 cycle right now. What do you notice about these price points? Yeah, you're noticing that we're pretty close to the top of the market. And it is my belief on this channel that we have actually seen the top of Bitcoin for this cycle. It's unpopular, but when I use my fibs and I see coins that go up to the top of the fibs and they double tap at the top there and start to come down, it starts leading me to believe that either it's probably the end of the market, or if it's not, I'm not that interested in the potential gains from this point on. So if we look at this, for example, the number that's being thrown around a lot is $100,000 Bitcoin. And so everyone's getting excited about $100,000. Where does it actually take us in terms of percentage from where we are today at $43,000? Well, $100,000 lifts us up about 135%. Let me pose this to you. If a coin like Dash or Bitcoin Cash or any other coin that has kind of more than 5x your money, so 500% and upwards left in the market, why wouldn't you go to those coins? Why would you be in Bitcoin just to get 1.35 times your money? You know what I mean? So it kind of shows you, using the Fibonacci's, if you can see a coin that has been in the top quarter, like the top quarter of this kind of Fibonacci area, it's in my opinion, and the fibs are super helpful with this, that the coin is not worth buying. For example, if we look at XRP, for example, this is the top of the 2017/18 market. We drag our fibs the way I've taught you to do that. And you can see that the price is actually still all the way down here. And this is the 0.236 Fibonacci extension line. This is the zone usually where coins go sideways, right? And this is exactly what we've seen for XRP. And the price is still below here. But what we're looking for, like most of the other coins, is that we're looking for prices to come up to this level. So let's look at the percentage gain that we have in XRP, for example. It's almost 2,000% growth. That's 20x your money. So when we look at Bitcoin and we can see it's already double tapped near the top of the Fibonacci's, maybe this isn't a coin that we want to be in. If Bitcoin was in this area, around that 0.236 line, then it would be a good buy. But Bitcoin being in the top of these fibs right now means it's not. So now that you're familiar with how to use the fibs in their price action on the way up, let's learn how to use the fibs for their price action on the way down. Now this is a really cool trick that you can use, and how I use this is actually to flip the price upside down. So we right click on all the price points on the right and we click inverted scale. This actually turns the chart upside down. So this is, as we go up on the side here, the price is actually going down. What it does is it helps with emotions, basically. So when you see prices all going up and it makes you so excited, you might act in ways that you didn't think you would act, right? You might buy in at the wrong moments. But if you flip it upside down and you notice something is really bearish on this chart, then you could accept that maybe the price is going to continue going this way, which would be up in price. But it's also reduced your emotions at the same time. So it's a really good thing to do for this. But what I wanted to show was when you place the Fibonacci's, we're getting a bit advanced now, but I'm sure you've been following along so far. We click our Fibonacci Retracement tool and we can use it to look at falling structures at the end of markets, okay? So what we're going to do this time is we've got a Fibonacci extension tool selected. We're going to go to the peak of the local high, which is the furthest right peak. And we're going to click, so that horizontal line is right there. We're going to click and drag it across so that the top of the Fibonacci tool here is actually at these peaks. And why we do that, I'm going to drag that across so it's in the same spot, is because this helps us decide where our retracements are. And I mentioned earlier that this 0.702 line, this white line on the chart here, is really influential when we're looking at retracements, because Bitcoin always has a habit of returning back to these retracement levels, and so do many, many other coins. So we've placed this 702 Fibonacci extension onto the chart in the right places, so the peak of the local market to the bottom of the local, the local bottom, which is back down here. And if we wanted to get to the top of that wick, then we could do that, be more accurate. And you can also see that this line has confluence as we go further along back in history. Obviously we can't see too far back, but that line also matches this wick right here. Essentially what you can expect from a coin, and I'm going to select my brush tool here on the top left, and then I'm going to select a color that you're actually going to be able to see. What you'd expect is that when we have a falling structure that looks like something like this, so I'm going to use mine actually. So actually I'm going to use this tool, this circle tool. Typically we'll see a falling structure like this where the price comes down on this chart. This is obviously the inverted chart. We bounce back to retest these kind of areas. We make a new all-time high, which is right down in here. And then we retrace back down to these levels and potentially sometimes even back down to these levels. And then we make a retracement back up to this 702 Fibonacci extension line. So when I draw that on the chart, it looks something like this. It could either go all the way down here and then back up to the Fibonacci 702 line, and then we start the bear market where the price goes down for a longer period of time. This is called a crashing structure, and the Fibonacci's are like key to identifying that. Now if we flip this back so it's not inverted anymore, what it shows is how a peaking structure looks. So we place that Fibonacci extension tool right on here. We expect a retracement where that price comes either straight up from here to touch that 702 extension and then tail off, or we expect it to kind of come up. Then we expect it to kind of come down to maybe retest these like $38,000 levels, and then we come up to the 702. But the 702 predictably is the end of the market, right? So if you don't have that 702 line on your Fibonacci's, you're not going to be able to accurately choose when you're leaving the market. And that's why Fibonacci's are so powerful for two reasons. One, we can track a coin's movement for a whole cycle if we use previous cycle data, and we can also track crashing structures, or in this case, peaking structures. And we're looking for that 702 Fibonacci extension level. It says 702 right here on the side. As soon as we get to that line, that usually indicates that the end of the market is here. And we take our money out and wait to the bottom of the market to buy the rest of our coins. So overall, the Fibonacci extension tools are my most relied upon indicator. It helps me choose when I'm going to be selling my coins, how I'm going to ladder out of my coins because of these other lines that you see on here that I haven't talked about much in this video. But these act as really good take profit points if that is kind of part of your strategy. You'll notice also that whenever you put a Fibonacci extension tool on, you'll see that at the lines, there's always traffic. There's always traffic at the lines. And so these algorithms that have been made by the scientists to kind of sequence this in some sort of chart, this biological behavior of someone buying or selling, it really shows in the charts when, you know, price is coming up and then all of a sudden it bounces off a line that if you just took that away, you'd just be looking at a chart and say, okay, it just bounced off this line. But when you put them on, you can see, look, this 0.5 line at $49,222, why did the price choose that line to bounce off? You know? And back here, why did it bounce off exactly on that line? And it's not random, it's not coincidence, it's biological. It's just tracking biological behavior. And in our instance, it's about the behavior and the emotions as to whether we should click buy or click sell. I really hope you enjoyed this tutorial. I've got another one on this channel coming out soon, and if it's out already, it'll be in the description below, about the stochastic RSI indicator, which is another one I use. I converge all of these indicators into kind of my theory and thought process when both I'm looking at short-term trades and also my long-term macro view trades as well. So stick around for that next one, and I'll see you there.